Hello traders and welcome to another video review. Today is Thursday, November 3rd, 2022. Let's find out what is going on today in the Forex calendar. What do we see here is of course the most important events. So what do we have? Interest rate decision in India already made. Then we have a speech from ECB President Lagarde. This speech is scheduled 10:05, and the key event of today is the Bank of England interest rate decision, and it's supposed to be hiked from 2.25% to 3%. Together with the interest rate decision scheduled for release at 3 o'clock, we have 2 o'clock, we have composite PMI and the services PMI. Both of them are poised to decline. During the London session, we have the initial jobless claims from the US and ISM non-manufacturing PMI. So this is the data from the US. Moreover, we have the Bank of England Governor Bailey. Andrew Bailey will give a speech at 2:30 and 4:15. So all of the pound traders, basically, especially cable traders, British pound to American dollar, should be on their toes today. So let's find out what is going on the chart. We start with British pound. For our time frame of the cable is showing us a weakness in this market, despite the recent attempts to bounce, as you can see here, that failed basically to extend the wave C high above 1.1632. All right, so what do we do now? We got this local trend line. Let's say this is it. As you can see, the market trends below this trend line. So far, there is no chance to hit the target level. The next target level for the wave C is the zone located between 1.1717, 1.1739. Okay, we are getting away from the 30 periods moving average. This is the yesterday's Fed decision. Very red pin bar as well, with a big upper wick. Today we are trading just ahead of the lows of the week, basically, because it's Thursday. We broke below 1.1410, and it all points out for another spike to the downside towards 1.1032, 1.1023. Momentum is already negative, so we should see another spike to the downside if the market of if the Bank of England will hike the interest rate. If they hike to the to the desired level of 3%, that's already something is already in the prices. However, of course, there will be some kind of a movement to the downside. But if Bank of England will hike the rates more, then of course we might see a very big sell-off on the British pound. Let's find out what is British pound to Japanese yen doing. For our chart of the British pound to Japanese yen, as you can see, is showing us a weakness again towards the technical support at 167.87. Let's switch to daily, and the daily is showing us exactly the same thing. Multiple divergences here between 3 and 5, between this swing and this swing high. So what we should expect is another decline, and the decline target is 30-day moving average around 164.88, and technical support at 165.03, 163.93. So the momentum is still positive. The momentum is still well, not that strong, 54 points. However, it's approaching the level of neutral of a value of 50, and if we break below this level, then of course we might even see the sub levels of 163.93. So keep an eye on the current development on the British pound to Japanese yen. It looks very promising. However, the 5-way advance had been completed, and now we are entering a corrective cycle. I guess that any decline more than the length of the wave 2, let's say the length of the wave 2 is almost 6%. So any decline more than 6% is definitely bearish, and it will confirm that the 5 waves to the upside are done. For now at least, okay? Now what do we have? Minus 3.64. Okay, minus 3.64. Now this is the correct number. So British pound to the Australian dollar, maybe. What's going on here? This one we don't need. We didn't look at it for quite so long. Now we got this level as the technical support, so we need to move it a little bit higher. This is a daily time frame chart. There you go. This is the technical support. We will move this one a little bit here because we got the pin bar and the bearish engulfing here. Let me take a look what's behind this level. Oh, there you go. This is it. That's the reason why we have this this situation here. So what we do is we try to break above this zone. 1.8131, 1.8198 is the zone the market is trying now to desperately trying to break through. Let me just zoom in to these levels. Okay, nice. What do we have here? Those two levels are done. Decline, bearish engulfing. We are consolidating very, very close to the technical support. Very good. Yep. However, it doesn't look good for bulls at all, because the market is trading still on the positive territory, 59 points. However, it looks like it's making higher highs without making higher highs on the RSI indicator. So what do we see here? I should put another technical support, because it doesn't look good for bulls at all. Short-term trend line, here we are. Okay, this is the 30-day moving average. Let me just find out where. Okay, this is the 30-day moving average. Fine, 30 days. I will just add one more moving average, and that will be 100 days moving average. All right, so let me just put 100 days moving average. There you go. So we broke above the 100 days moving average. Nice cross here. However, it still doesn't look good. In my opinion. Where is the RSI? There is the RSI, and next target for the bears is 1.7707, and the market should come off the elevated levels, pin bar and bearish engulfing pattern in the background. So the British pound to the Japanese yen, New Zealand dollar, and the British pound to the euro. So let's find out if we got this kind of a pair, euro to the British pound, and that's a very interesting thing. It's very interesting because, as you can see, we are keep going down. Okay, all of the technical supports has been tested, and right now, when the Bank of England catching up the Fed and the other guys, it looks like we might have another, let's say, another reason to go lower. So what do we see here? Let me just move this one. Very sharp declining line here. Of course, it should be placed from the bottom, but this is the overblown some daily pin bar, which says briefly, okay, that's it, we are not going up anymore. So the market keeps trading to the downside right now, testing the technical support 8,582, next technical support 8,402. The outlook remains bearish, big pink bar in the background, no doubts about it. Last but not least, let's take a look at the S&P 500 index after the yesterday's interest rate decision. What do we see here? Very clear situation. We are out of the channel. We tested the which one is this one? 100 days moving average. Okay, rejected from the technical resistance. We are out of the channel. Now we are approaching the technical support between 3726, 3739. We can bounce from it or consolidate. However, the outlook remains bearish, and we should see a test of 50% of the Fibonacci retracement very soon. Please remember, yesterday the Fed hiked the interest rates as expected and said that it's too early to stop hiking the rates, and this is the clear signal that they will hike more, dollar will cost more, and this is why the market is going lower. What can we see here is maybe another trend line will be at. So as you can see, the market tried to like a test of this trend line, yet tried to break out, positioned itself ahead of the Fed meeting, when the Fed didn't deliver, back under the trend line straight on. So the outlook remains bearish. Please stay focused and keep an eye on the technical supports on the chart. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. So take care and bye bye.